Now, consumers can breathe a sigh of relief as the prime lending rate is at 11.5%. The South African Reserve Bank's Monetary Policy Committee unanimously cut the repo rate by 25 basis points to 8% with effect from today. This unanimous decision marks the first time since May 2023 that the committee has changed rates. But to talk more on this matter, we are joined by economic advisor to the Optimum Financial Services Group, Dr. Roelof Botha. Dr. Botha, good to have you. Thanks so much for joining us on the program.
Thanks. Good morning.
So 25 basis points, I imagine you were hoping for more along with the rest of South Africa, but was this in line with expectations?
Not entirely. The decision, if I had to think of one word to describe the decision, it is the word appalling. I can think of choicier words, but I can't say that on TV. It is actually to some extent ridiculous, because I just want to take the viewers back to just before COVID. South Africa's prime overdraft rate, which is the one that we know about, it's 3.5 percentage points above the repo rate, but the prime overdraft rate was 10%. And inflation was more or less exactly where it is now. Now the prime overdraft rate is 11.5. It doesn't make any sense, quite frankly, because this economy has not fully recovered yet from the COVID pandemic and from state capture. What we need in South Africa desperately is economic growth and job creation. And you cannot do that if your real interest rate, that's now the prime rate minus the inflation rate, it's not intimidating maths, is amongst the highest in the world. There is no consistency. When the previous governor of the Reserve Bank, who was a colleague of mine at Gibbs, when she was in charge, the average real prime rate was 3.1% during her term of office. Jill Marcus. The prime rate, the real prime rate in South Africa today is 7.1%. It is an increase of 129%. The Reserve Bank has lost sight of the second part of its mission statement. Not the Reserve Bank itself, it's a fine institution, but the Monetary Policy Committee, those 5 individuals that hold sway over the finances of 60 million people in this country, they've lost sight of the second part of their mission statement, and that is to make sure that this economy grows. But they have an obsession with driving inflation down. And that worries me.
Yeah. I mean, obviously there are a lot of critics out there that are saying that this is far too low and too late, because people are finding themselves in an exceptionally difficult financial problem, in debt, owing so much money, savings, except for the extremely wealthy that have been benefiting from these high interest rates, but the rest have just been made poorer and poorer and poorer. Perhaps we can talk to that. I mean, what rate should we be sitting at? I mean, should we be looking at the Western world as our big light to be following, or should we be thinking about the circumstances of the people of this country?
Well, I couldn't agree with you more. My concern is not with the people that are so rich that they can put millions of rands into fixed deposit accounts and earn handy interest rates. My concern is with the millions of South Africans that do not have a job. You cannot create jobs at scale if you have the highest interest rate in the world. I do not know what has happened with the Monetary Policy Committee's understanding of this economy. This is not the United States of America. The debt cost, the percentage of debt cost expenses of the average household in South Africa is now 9.2% of disposable income. It is the highest in 15 years. And total outstanding household credit in South Africa, as we speak, is in real terms significantly lower than it was 10 years ago. And apparently the Reserve Bank, the MPC doesn't do their homework. They don't do their homework because this economy has never been able to grow at sustained high rates unless household credit extension, read mortgage loans, especially for building houses, has increased in real terms. It is not happening. The inconsistency of monetary policy since Jill Marcus's retirement has been a huge point of concern to myself and several other economists. And I just don't know what to do. I've suggested at a very senior level to government officials that they should seriously consider expanding the composition of the Monetary Policy Committee to also include seasoned veterans of economics in the private sector, and also the chief economist, for instance, of National Treasury and of the Department of Trade and Industry, so that one can have a more balanced perspective on what monetary policy in this country should be. It is the biggest single obstacle to economic growth in South Africa right now, is the monetary policy of the Reserve Bank.
Yeah, I mean, if we just look at what the governor was saying yesterday, I mean, he forecasts that rates moving towards neutral next year, stabilizing at about 7%. So this basically implies that we should be seeing a 75 to 100 basis point cut that will be coming in, hopefully, the short term. What do you make of that? I mean, is that good enough?
They are so far behind that they're not going to make this race, because the bond yield, the 10-year bond yield, which is South Africa's benchmark long-term interest rate, and viewers are welcome to please, have a look. If you Google and you go to Trading Economics website, they've got a brilliant interactive graph. South Africa's 10-year bond yield, which is over the long run as a positive relationship with our money market rate, which is the repo, but we talk about the prime rate because that's the one that we have to deal with. That repo, that long-term bond yield has declined in the last 5 months by 210 basis points. Sure. Now we've had a 25 bips decline in the repo rate and prime rate, obviously, as well. But inflation has dropped by 20 basis points. So we're exactly where we were. And this is the frightening thing, is that since the last inflation print, South Africa's real interest rate has stayed exactly the same. Our real prime rate is still 7.1%. The prime rate in South Africa, if you look at the correlation with the bond yield, should be, as we speak, should be 9.5, not 11.5. And that would make a meaningful impact on people's ability to pay their mortgage bonds, to retain their houses. On the average bond administered by Better Bond, homeowners are now paying 4,000 Rand a month, every month more, since the MPC started with this excessively restrictive monetary policy. And that is my concern, that people are losing their houses and we are not creating jobs.
And that's unfortunately a reality for a lot of people. But I mean, when you look at a 25 basis point, you're the mathematician here. I'd love to have already prepared a little graph to say this is how much less you're going to be paying. But that's one of the questions we've been asking viewers, is this going to give you relief? Is this going to help you? How much of a relief is it really?
Well, let's call it Mickey Mouse. It helps. If you look at the comments that you received just before the interview, it certainly helps a little bit. The point I'm trying to make is that our interest rate remains way too high. There are so many indicators that are telling us that South Africa's prime overdraft rate should be closer to 9% than it is where it is right now, 11.5%, to make a real difference. The 4,000 Rand a month, which I was talking about, you multiply that with several million South Africans. We need demand in this economy. It seems as if the MPC has lost sight of the fact that there is no demand inflation in this economy. No. If you look at the capacity utilization in manufacturing, one of our major sectors, also for employment, that capacity utilization is still lower than it was before COVID. And the irony here is that if the Reserve Bank were to lower rates by what they should come down with, and that is at least another 200 basis points, then with the increased demand, and obviously your manufacturing capacity in South Africa's, the capacity utilization in manufacturing will expand. And that will mean that your supply side inflation will drop because your overhead unit costs will decline. But I'm afraid that until such time as we have an infusion of people that are more growth orientated into the Monetary Policy Committee, we're going to have to live with this anomaly. It is, to my mind, frightening. This country needs to create jobs. Every job that is created broadens the tax base and combats poverty.
And that's, I mean, I think a lot of people have been feeling that for some time, that they feel that, you know, possibly the Reserve Bank is completely out of touch with the man on the street, and they're more concerned about business and, you know, attracting investment. I mean, when you read some of the comments coming through, you know, just from RMB when they came out and they said, you know, it's better to leave it at 25 because 50 basis points would have exacerbated real interest rate differentials, which undermines the efforts to enhance the attractiveness of South African assets and to stabilize the rand. But in real terms, and that's what we keep on, I think, referring to in this interview, is yes, that's one aspect of it. But the other aspect is the suffering of the people in South Africa. To compare ourselves to Europe and the Americas and developed countries right now, in the state that we are in, with such a massive unemployment rate, is it fair? I mean, is their look the right way to be looking, or is it better to find a balance?
Yes, there are some of these so-called investment analysts or other so-called experts that argue that we should maintain high interest rates so that we are an attractive destination for investment. People do not invest money in South Africa because of ROI money market rates. You know, let's be quite honest about that. People invest money in this country because it's a platform to the rest of sub-Saharan Africa. It is a latent, massive latent consumer market. The likes of BMW, Mercedes, Nissan, etc., that are investing in South Africa, they do it for other reasons. High interest rates are not conducive to economic growth domestically. High interest rates have, in the past year, destroyed jobs in this country. That is a fact, and I can prove that.
Talk to me. I mean, let's in an ideal world, where should the interest rate be? How do we spur economic growth in this country? How do we create jobs as a matter of urgency? Because I think we're at the urgent side of life right now, where people and this country need to wake up and go to work, find jobs, not be having graduates that have these degrees that cannot find a job and are sitting at home, not to mention so many other millions of people that are just not able to go. How do we grow this economy?
Well, you know, it's actually very simple. All I'm actually asking for is that the monetary policy remains consistent with the policy approach that was followed in Jill Marcus's term during her term of office. That was just after that financial meltdown in the world economy, when we had 3 successive quarters of negative growth. And despite that, we grew during her term of office this economy at almost 3% in real terms. Since then, I don't have to tell viewers what has happened since then. The real prime rate in South Africa, the real prime rate should be in the vicinity of between 3 and 3.5%. Right now, it is 7.1%. That is, as far as I'm concerned, crazy. We need demand in this economy. We need to, if we want to annihilate abject poverty, and we can do that by definition if we if we change the COVID grant, as it's called, to a permanent basic income grant at the minimum food level. If we can grow this economy at between 3 and 5%, and we've done that in the past, in the democratic era, then we should be able to afford what I've just said. And then we annihilate abject poverty. Everything is in place now with the National Logistics Crisis Committee, the work that they are doing, the cooperation between the private sector and the government of national unity. The timing is so good for this economy to really start growing. We have seen a slight uptick in some of our commodity export prices. But what we need now is desperately is lowering the cost of capital. And when I talk about capital, I'm talking about the physical assets that you require to produce goods and services and to create jobs. For a farmer, that's a tractor. For a small builder, that's a bakkie and a cement mixer. For a consultant like myself, it's a laptop and a fast car, on a lighter note. But we need economic capital in South Africa. We need these assets to start, people to invest in assets and thereby expand our production and create jobs. Yeah. You cannot do that if you have the highest cost of capital in the world. The Reserve Bank's Monetary Policy Committee has lost the plot.
Let's look at the global climate at the moment. I mean, we're seeing now what the US are doing. They cut by 50 basis points. Is this, we know that the economies and finances work in cycles. Is this the moment we've been waiting for? I know it's late. I know that, we could, as a country, be doing more. But if we look at a global economy and perhaps us moving in that proper direction, because things are looking better. I mean, the rand is looking stronger. Our inflation is coming lower. Interest rates dropping, albeit, as you say, and what many are saying, and too little, perhaps too late. But there is this turnaround. Is there optimism? Can we feel some optimism?
Yes, absolutely. Viewers would be surprised, I suppose, if they were to find out that my nickname is the Sunshine Economist. I always look for the positives. But right now, as I've said, we do have this dilemma. If you factor in what is called the natural rate of unemployment, these are people that are raising children that have just had babies, that are sacrificing 1 or 2 years work for further studies, doing MBAs or whatever the case may be. That natural rate of unemployment is estimated in the developed world at between 3 and 5%. If you factor that in, the United States of America does not have unemployment. It is a massive diversified economy where venture capital is allowed to flourish. And this is an interesting point. If your domestic interest rate is too high, as is the case in South Africa, it acts as a tax on venture capital because it just becomes too easy for a business person or whatever. Instead of trying to expand his business, his or her business, and create jobs in the process, you just park your money at one of the banks or wherever, fund manager, like Optimum, for instance, and you get a handsome return of anything between 8 and 12%. That's been the sort of benchmark. If you lower that interest rate, it acts as an incentive for people to rather invest in their businesses. These causalities seem to have been lost ever since Jill Marcus retired. It is frightening to think that the United States of America, which has virtually no unemployment, lowers the repo rate by 50 basis points, and their real lending rates, they are significantly lower than ours. But we keep on maintaining this. It's almost as if they think it's fashionable to have a conservative and a restrictive and overly restrictive monetary policy. They must just go and have a look again at the Reserve Bank's mission statement. They should also encourage growth and employment creation, and they are not doing that.
So finally, as we wrap up and go into news, another meeting in November, perhaps they'll hear the cries and listen to what South Africans need. Maybe another 50 basis points or 100 perhaps at the end of this year?
I really hope so. I really hope so. If I were governor of the Reserve Bank, the prime overdraft rate would be 9.5% today. And that would not have been an overly stimulating rate of interest.
All right, we leave it there. Dr. Sunshine, Dr. Roelof Botha, thank you. Thanks so much for talking to us. Honest opinions there about the economy and the state of South Africans on the back of that 25 basis point cut that we heard from the Reserve Bank yesterday. Too little, too late? Do we need more? Yeah, all right. Economic advisor to the Optimum Financial Services Group. Interesting interview there. And indeed, something that we do need is to stimulate that economy and create jobs.